This is Chad Toyne with your Tuesday, April 14 special report for grains from Trader PhD Ag Marketing. Hang with me as I lay the foundation. As I promise, all of this comes back to grains. The big news lately has been the U.S. naval blockade of Iran. Some are calling it a blockade of the Strait of Hormuz, but really, we are just plugging up all of the seaports in Iran so that nothing can come in and nothing can come out of Iran by sea. We're not restricting ports from other countries that may be in the Persian Gulf, and we are not closing the Strait of Hormuz. Trump has stated that he wants the strait to be open, but the main point is that Trump is pressuring Iran by pinching off their imports and exports by sea. It doesn't matter if it's oil or if it's grain or fertilizer or a cargo of paper clips. It doesn't matter if it's sanctioned oil headed for China or if it's commerce with a close ally of ours. The U.S. Navy has shut down all of Iran's seaborne commerce, and it doesn't stop there. Trump states that what Iran was doing was allowing some vessels to come in and out, and if they paid a toll to get safe passage through the Strait of Hormuz, is nothing short of extortion on the world, and that the United States was not going to allow that to happen. And furthermore, if a ship of any country origin paid an illegal toll and they were on the high seas, that they are not safe and that the U.S. Navy will interdict that vessel. And folks, that means that even if it's a tanker full of oil headed for China, owned by China. Now imagine looking at a map of the vessels in the area, the Persian Gulf looking crowded by a lot of stalled shipping vessels, and a few making their way through the strait. A few promptly made a U-turn and they headed back the other way instead of exiting. This news, which was really Monday's news, had the crude oil market up, the stock market down, and some risk premium put back into much of the grain markets. But then came reports that Iran had reached out with an olive branch wanting to have talks again. And not only that, but the United States was entertaining having these talks. So now crude has come back down and the stock market has come back up. A couple of points here. The stock market, depending on what index you want to measure it by, like the S&P 500 or the NASDAQ 100, has recovered well over half of their losses, and they look to be within striking distance of making a fresh, all-time high here one of these days. Certainly sometime here in April seems to be a possibility. And it's done so in the face of a hot PPI number that came out today, the Producer Price Index. It's a financial government report like the WASDE or the Grain Stocks Report, but it's one that shows what pricing is for companies that produce things in the United States and what they have to pay. It's a key measurement of inflation. The number was expected to come in hot. That is a high rate of inflation, and the actual number came in even hotter than expected. And you'd think, with inflation happening, not only for consumers, but now with producers, that it would spook the stock market into thinking that it's trouble for the economy. But no, stocks have pushed higher even here today. Folks, we've got the stock market climbing in the face of Middle East unrest, naval blockades, and now extra hot inflation numbers. And what's the stock market do? It's acting like it wants to make all-time highs. If bearish news, like the kind that we are swimming in today, doesn't push the stock market lower, what's bullish news going to do? It's hard to be a bear in stocks. And then the second point, are you seeing a pattern here? Peace in the Middle East isn't going to be easy. It's never been easy. I'm not sure it's ever existed for thousands of years. One day we're ready for war, and then the next day we think that peace is on the horizon. I'm not betting on a smooth or elegant resolution anytime soon. In fact, we have so much committed in the Middle East that it looks like we intend to make a much bigger deal of it. So, how does all this come back to grains? What's it mean for the price of corn and beans and wheat? First, let's make an assumption. Iran isn't going to be like Venezuela. It's a whole different ball of wax. Venezuela was quick, simple, and easy. When we decided to strike, it was a done deal before we even know it started. And with Iran, you're talking about a military force that's 1,000 times larger than what Venezuela had. Operation Midnight Hammer with the B-2 bomber strikes on deep bunker nuclear facilities back in June, that was nearly 10 months ago. Epic Fury has been underway with strikes for both the U.S. and Israel. It started 6.5 weeks ago. And there's so much more missiles being fired and attacks that Iran is doing on their neighboring countries than what you're seeing on TV. It's a big mess, and it sure doesn't look like it's coming to a close to me. Military foot soldier deployments out of the United States are ramping up, and the progress that we've made so far is too great to expect to have control turned back over to a new regime that might be set up in Iran. If the United States plans to have all of this turn into lasting change, then it's going to be a tough going for months to come. Countries like China and Iran, they have a culture that's different than ours. They don't settle, they don't make concessions, they don't admit defeat. They don't know how to lose. And that's what we're asking them to do in negotiations. The IRGC, the Islamic Republic, that's the leadership on Iran, the only future that they see for Iran is one with nuclear arms. They need to have supreme control over their country, and that requires nuclear capability. And it's a point that the United States and much of the world can't give them. The most likely thing to happen is for the eventual complete defeat of the IRGC, both their leadership and their assets of war, which still include some nuclear enrichment facilities that are in operation ongoing right now. The price of grain. Let's talk about corn. To talk about the long-term price of corn, we need to talk about the price of oil. Assuming that we keep a blockade on Iran, that takes a lot of crude oil off of the world market. And depending on how much U.S. oil hits the world market in the form of exports, crude could reach $150 a barrel or higher. Higher crude supports a higher floor on biofuel, and that's direct on corn and soybeans. Now let's factor in that zero fertilizer comes out of Iran. If Middle East fertilizer export traffic fell to zero, that's going to mean higher fertilizer prices, and that means rationing use by agriculture all over the world, and down comes yields. How do you put a price on corn if we have zero crude and zero fertilizer coming out of Iran alone, not to mention shipping disruptions from other sources in the Persian Gulf? It's a double shock to the global corn markets. And now factor in weather. We could have ideal weather, trendline yields, or poor weather. Here's the best estimates that I've been able to put together with these three weather scenarios. Ideal weather, corn averages $5.75 a bushel in Chicago. Average weather with trendline yields suggests corn averaging $7 a bushel in Chicago. And below average weather suggests corn averaging $8 to $10 a bushel until price alone rations demand. But the world will pay through the nose for gasoline and thus ethanol if they needed to. Folks, I'm trying to impress upon you just what might be a reality. If you don't book fertilizer and diesel fuel, that could be a costly mistake. If you sell too soon of your corn and your crop on a rally, that could be costly. If you let a monster market that has shot up and it slips back lower and lower and you're just hoping it's going to come back before you make a sale, you might miss the whole thing. Perhaps the stakes for farming have never been higher. You having fun yet? That's it for today. I'm Chad Toyne, and this has been Trader PhD. Past performance is not indicative of future results. Futures trading involves substantial risk and is not suitable for all investors.